Hello everyone, welcome to ixamBee. Please don't forget to subscribe to the channel and press the bell icon so that you are updated about all the videos and concepts that are available on ixamBee's YouTube channel. In this video, I'm going to discuss about the costing MCQs, which will be important for your SEBI and your PFRDA Grade A exams. You will be able to download the PDF of this video from the description of the video. Before I start the discussion of the various questions that we had conducted in the SEBI scholarship test, there is a new question that I have for you on the costing. So there's a company, Deepak Limited, which produces two products, shirts and trousers, and the sales price and variable cost related to each of these products has been given to you. Also, the fixed cost has been given for the company, given that the company sells 6 trousers and 5 pairs of units of t-shirts together. What will be the break even of the company in the product mix in relation to the t-shirts? So this is the question that has been given to you. Wait till the end to know the solution, where I will help you that when we have two products going together as a product mix, in that case how to approach the question to calculate the break even. Such discussions we do in detail at ixamBee with our faculty and students so that you can unfold your potential. ixamBee is the only platform that will help you clear your doubts, your concepts, and unfold your potential so that you can shine in every exam. Let's discuss the first question of the scholarship test. Given the production of 1 lakh units, fixed cost of 2 lakhs, selling price of 10 rupees per unit, and the variable cost of 6, what will be the profitability of this particular company? The approach here is to know the actual sales revenue and subtract from it the total cost. So the sales revenue is your number of units produced, because nothing has been mentioned, so it is assumed that all the units that have been produced have also been sold. So 1 lakh units at 10 rupees per unit, which gives you the sales of 10 lakh. Then I have my all the costs, the variable cost, and I have the fixed cost. My variable cost is 6 per unit, which will give me 6 into 1 lakh units. Okay, so my total variable cost is 6 lakh, and I have a fixed cost of 2 lakh. Okay, so this gives me a total cost of 8 lakh. Thus, for my profitability is 10 lakh minus 2 lakh minus 6 lakh, which is 2 lakh rupees. Next question, which of the following best describes the approach which matches the manufacturing output to the market demand in order to minimize inventory, right? So we are looking to minimize inventory. It is a lean systems related question that is there, in which I am trying to match my output to the market demand. That means I am trying to follow a pull strategy here, right? So this is associated with JIT, just in time. Before I move on to the next question, let me remind you that we are starting a new batch of 50 days from the 1st of December to prepare you for the SEBI Grade A 2023 exam, which is likely to be held in January, around 28th to 29th of January. So you can enroll before the 1st of December to take the benefit and be a part of the 50-day study plan, which will focus a lot on numericals, case studies, and value additive questions for your exam preparation. Let's move to the next question. Which of the following is or are not a part of the cost sheet? So cost sheet is prepared to know the cost pertain to the products or the services that the company provides. So is it the prime cost, the works cost, the cost of goods sold, or none of the above, or all of the above? The correct answer here is D, none of the above, which means that all of these are part of the cost sheet. We first add up all the direct costs related to material, works, and expenses, which gives you the prime cost. When we add the factory overheads, we get the works or the factory cost. To this, when we add the admin and the selling overheads, we get the admin cost, we get the cost of production, to which we add the selling and distribution overheads to get the cost of sales. To this, when profitability margin is added, we get the sales price, right? So but cost sheet is here, till there you can follow. Next question is a numerical related to variances calculation. So here it is mentioned that the company has purchased 25,000 kgs of material at a cost of 137,500. So that means this is the actual quantity. 1,37,500 is the actual cost. Okay, then we have used 10,500 kgs of material to produce 2,500 units of the product. The standard cost per kg has been given of the material, which is ₹5. So this is the standard cost of the standard price per unit. So we have to calculate the direct material price variance. Now direct material price variance we know is given by the actual quantity into actual price minus the actual quantity into the standard price. Now actual quantity into actual price I don't really need to calculate because this has been given to me here. Okay, so this is the actual cost as we had discussed, right? So my actual cost here is 1,37,500. Now actual quantity into standard price, right? My actual quantity is 25,000 because this is what I have purchased, and my standard price is given to me as ₹5. So I will calculate that. So 1,37,500 minus 1,25,000 gives me 12,500. Now this number is positive, which means the actual cost is more than the standard cost. Given that fact, this is unfavorable because my actual cost is more than my standard or the budget cost that I wanted to incur. So that's why my answer is B, 12,500. Unfavorable. Okay, my next question is again a variance question. Here I have to calculate the standard rate per direct labor hour. Okay, so I have already been given the variance related to the direct labor. Okay, that is 4,800. Unfavorable. That means my actual labor cost is more than my standard cost, right? So this is what is known to me. The question further states that the actual labor was 24,000 direct labor hours. Okay, so I know the direct labor hours, the actual one, at a cost of 1,68,000 for 25,000 units of the finished products that are requiring 1 hour of direct labor each, right? So the 1 hour of direct labor each is required. So if I have to see the rate, the actual rate, what was the actual rate here? I have spent 1,68,000 for 24,000 hours. Okay, so 1,68,000, okay, divided by 24,000 will give me the actual labor hour, which is ₹7 per labor hour is the rate. I know the variance, which is unfavorable in nature. All I need to now calculate is my standard rate. I already know the actual hours that I have spent. The actual hours are 24,000. Actual rate is ₹7. Now my variance is, I have put in this formula, the first line. If I put it in the formula, this one, I know 4,800 should be equal to 7, which is actual rate because my actual rate is more, minus the standard rate into the actual hours that have been put in, 24,000, which gives me the standard rate as 6.8 rupees per hour. Next question, when the cost is charged as expenses against the revenue of the period in which they are incurred and non-assigned to the products, what it is known as? The correct answer is D, period costs, right? So when they are not attached to or assigned to certain particular product, they are relating to that particular financial period or duration to which the cost associates, and therefore they are known as period costs. Mostly fixed costs are period costs in nature. The other costs are the product costs, which are directly associated with a certain product or goods, and these are also variable in nature. Next question, which costing techniques is one referring to when stated that the cost of a product being ascertained, where the product being the only one produced like bricks, coals, etc. So which kind of costing is we are referring to? The correct answer here is C, unit costing, right? So we are actually calculating the cost per unit of homogeneous products being produced, right? So that is what is known as your unit costing. Next question, the process and the job costing differ from each other in each of the following ways except which of the following? Under job costing, a particular job is carried out as per the specified orders, while under process costing there is a continuous flow of production of a homogeneous product. So this is a correct statement. Under job costing, cost is determined for each order, while for process, cost is compiled on a time basis. So that is also correct. Job costing is unique to every order, to every customer, while process, there are certain processes in the production and therefore the cost is being calculated for each of those processes. Under job costing, costs are computed when a job is completed, while under process costing, costs are calculated at the end of the cost period. Again, this is a correct statement. Because job is related to the completion, while process is related to the completion of the particular process in the entire period. Under job costing, the production is standardized and requires less control, while under process costing, more effective control by management is required as production happens in large quantity. Or all of the statements are correct. The correct answer is D. Actually, it is vice versa. In job costing, there is less of standardization, more of customization, while in process, there is a lot of standardized processes that are being followed. Those were the questions from the scholarship test. Now let's move on to the question I had asked you at the beginning of the video, where we have two products which are simultaneously being produced and sold in a particular proportion, and the company wants to know its break even for one of the components, which is the t-shirts. So the approach here in this case is that you need to calculate the contribution not just per product, but also as the contribution mix in which they are being sold. So I know that my product, my contribution, to calculate my contribution mix, first I need to know the contribution per unit. So my contribution per unit of t-shirt is 420 rupees, 800 is the sales price, variable cost is 380. So 420 is my contribution per unit for the t-shirt. Then similarly for my trousers, the per unit contribution is 980 rupees. Now I need to know my product mix. My product mix is what? 6 units of trousers and 5 units of t-shirts. Now, so I will calculate my contribution mix. Okay, what is my contribution mix? 5 units of t-shirts, which is 5 into 420. Okay, and 6 units of trousers, which is 6 into 980. Okay, so this is what 7980 rupees is my contribution mix. Now I have been told that I have total fixed cost of 43,89,000, right? So this information has been already given to me of 43,99,000. So now I have been able to calculate my break-even sales mix, right? Sales mix, fixed cost divided by my contribution mix of 7980. This gives me a sales mix of 550 mixes, right? So this is the combination of 6 pairs of trousers and 5 units of t-shirts, which will give me the break-even sales. Therefore, my break-even t-shirts is in every mix I have to include 5 units of t-shirts. So I multiply this by 5 to give me the number of t-shirts that I need to sell to break even in this product mix, right? So the approach here is same as what we follow in all the other questions, that we divide by a contribution, just that here the contribution will be the combined combination. Okay, I hope you will be able to solve questions like these in the exam if so asked. Thank you all for watching and all the best. Please don't forget to comment in the box about the questions that have been discussed here, and your views on the concept पढ़ाएंगे सबको सिखाएंगे series that has been running on the YouTube channel. I hope you are taking benefit of these for your preparation for various exams. Thanks, and don't forget to subscribe to the channel and press the bell icon.